Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. Dive right in, take a look, see what people are sharing today. If you want to follow me, it's at Finance. If you want to join our community, finding-value.com. We've got a Sunday question and answer session coming up. It's at 6:30 p.m. on Sunday, Mountain Time. It had to be delayed by 90 minutes, just to let everyone know. The delay is 90 minutes from when we normally start on Sunday. We do have a discount coupon code, DISCOUNT, which is active if you'd like to join and try it out. So Martin Pelletier says, yes, you do. So what is this response? It says, breaking. Trump tells World Economic Forum the U.S. doesn't need Canadian oil, gas, autos, or lumber. And if you look at the actual data, U.S. crude oil imports in 2024 by country of origin, Canada is 62%. Now, why does America actually need Canada's imports? We import their heavy oil. Their heavy oil is absolutely necessary for the refineries to refine, we'll call it the viscosity of the oil correctly to make the things that we need. So, do we actually need Canada? Yes, we actually do. We've been increasing our imports from Canada, and they're now about 4 million barrels per day of heavy oil. So, I don't know why he's out here just spouting off all this BS. I mean, he's out there talking. We don't need this, tariff that. I don't know what is going on here. Like, we do need this. And OPEC also sends us, I think, heavier oil. And we produce a lot of light stuff. So there is some stuff going around where we need to get it to a certain viscosity where we can start to work with it with our refineries. And there's other refineries in the world too. They need certain viscosities. As the viscosities of oils decline and we produce more light oil, natural gas, liquids around the world, heavy oil is going to become a lot more valuable because that's what we have the refining capacity around the world for. So Canada is sitting on what I would consider to be a gold mine, or maybe even better, a heavy oil land package where this stuff's going to be highly sought after in the future. Razor oil, I like this. I like when people start firing back. So Trump says, we have the largest oil and gas on earth that have ever been seen by anyone, frankly. The biggest oil and gas, hugest by all humankind ever. Meanwhile, the actual oil location. So 2022 world oil reserves, we've got Venezuela, Saudi Arabia, Iran, Alberta, 9%, rest of Canada, nothing. And then we've got rest of world, 46%. These are the largest holders of oil. Alberta, Iran, Saudi Arabia, and Venezuela. Now, these are not all the same oil type. There's different viscosities. Heavy oil, medium oil, there's light oil, there's natural gas, liquids, and they're dispersed differently. Saudi Arabia has that big, gigantic Guar oil field, huge producer over all these years. It's a conventional well. Some of these other ones are more unconventional. They're more of a mining operation, depending on where you're looking at. Some of them, they've developed techniques in situ mining where they basically drill holes and then run fluid across multiple holes and then gather it that way. It's not all the same. Flow rate and reserves are separate. You can have high flow rates out of conventional, like Saudi Arabia's Guar, and Alberta is going to struggle to equal the same amount of flow rate given the equipment and capacity that's needed. So mining it out of sand is way different than taking it out of a large, gigantic oil field, which is conventional, which Saudi Arabia has. So yeah, we're not even in the top four here. He doesn't know what he's talking about. I don't know why he's saying this stuff. I don't know why. Ronnie Stoufferle says weakening the dollar early in his second administration would make U.S. manufacturing competitive. A weak dollar and plentiful cheap energy could power a boom, says Jeff Besant, January of 2024. Now, here's the problem with that. What they want to do is they want to weaken the dollar, they want to bring interest rates down. That's exactly what occurred in 2001, 2, 3. They weakened the dollar. We had a slowdown in 2001, a recession. They weakened the dollar, they lowered interest rates, and then we had this gigantic commodity boom, like a big time commodity boom. Everything went up. It was driven by the weakening of the dollar. And here we are in Jeff Besant. So Jeff Besant's going to be the Treasury Secretary of Treasury, I think, what he'll eventually be. I don't know if he's already in it or not, but says weakening the dollar early in his second administration. This is what could occur. He could blow up a gigantic commodity boom. It's the same exact recipe as 2002, 2003. And that's when we saw commodities just rip. Um, I think energy is going to go up. I don't think it will be cheap. I think it'll be expensive. And we're going to talk about energy a little bit below um, on what's going on. And things are confusing to me. Energy is the most important thing when manufacturing. It's in everything, especially oil. It's not just energy and oil. Oil's in everything. It's in paints, lubricants, all that stuff. It's also in transportation and other things that are energy related. So when they say cheap energy, why would you put tariffs on Canada's oil? And why would you come out and say you don't need the oil from Canada when you 100% need it? So I don't know what is going on here. I don't know what this disconnect is. They're talking out of both sides of their mouth. We're going to tariff the living crap out of these energy sources that are coming in. But on the second side, we're going to say, oh, cheap energy is going to power this boom. It's like, okay, what energy are you going to use? Is it not going to be oil and natural gas? Then what do you have left? And then the components that go into making all of the other energy are going to get tariffed. So it's not like we manufacture a ton of renewables here. China does. So he's going to tariff that too. And how do you get this cheap energy boom? I don't know. Martin says, instead of joining the US, remember back in the mid 2000s, we had a dollar at par. This was because of our booming resource sector. Let's say we get to 8 million barrels of oil per day, all tied into Tidewater, a fleet of VLCCs, and watch our Canadian dollar rocket. Let's have a long-term goal of moving all of our barrels away from the US unless Trump wants to pay market prices. I would say that's completely legit. He's trying to get everyone to flood the market with oil, and the Middle East is like, no, we're not going to do that. So then Trump comes out, oh, we have like tons of reserves, where we got tons of them, huge, huge, huge reserves, and it's like, really? We're not even in the top four. Yeah, they're the biggest, hugest reserves. Uh huh. Gotcha, buddy. Cracks a hell of a drug. We're going to need oil prices well over $100 within 3 years to provide the world with the oil it needs. My best guess is probably $120 per barrel. We just saw rig count get chopped, and we'll go through rig count below this. So I thought we were going to drill, baby, drill. We can't, not at $75 a barrel oil. It's too cheap. How do I know it's cheap? Well, look at the gold to oil ratio. It's really cheap. It's above 30. That's generally where things bottom. And that's where people pull back. They pull back on production. And that's exactly what we're seeing. So drill, baby, drill is a slogan that will not materialize unless he does something where he subsidizes it somehow and gets people drilling again. I don't know how he does that at the current price. So um, I don't know how it's possible. Maybe he knows something about finance that maybe we don't know, but at $75 a barrel, everyone's pulling back, and they're trying to um, preserve cash flow, preserve the tier one drilling locations, preserve their reserves, and not sell it too cheap. Good luck with trying to get everybody to flood stuff. Peter Schiff says the reason Saylor claims Bitcoin is valuable digital property is because it's the only asset with a fixed supply. But anyone with a Solana address can create a meme coin with a fixed supply at practically no cost. The potential supply of fixed supply digital assets is infinite. That is correct. Michael Saylor is wrong. There's a fixed supply in Bitcoin. That is a correct statement. But there's no limit to how many other cryptocurrencies you can create. You do not derive value by having a fixed um, supply of anything. There's a fixed supply of everything in this world to some degree. There's a fixed supply of gold and silver in the Earth's crust. We may or may not know what the ultimate limit is, but there is a fixed supply. It's not somehow self-generating this gold and silver underneath the Earth's crust. It's there. We just don't know it's there. But it's in a finite supply. There's a whole bunch of other things like limited Hot Wheel editions where there's a fixed supply of Hot Wheels. There's a fixed supply of Ken Griffey Jr. rookie cards and Michael Jordan rookie cards. There's fixed supply of all sorts of stuff. So what is the ultimate deciding factor that gives value to some of this? Well, that's what a person is willing to pay for it. Now, the tough part here is Bitcoin is an unregulated item where people can trade this stuff back and forth and try to get people to come into it just because it's going up. It doesn't mean that Bitcoin itself has any sort of value. They could potentially be tricking people into adopting Bitcoin in ever greater quantities. I don't think there's anything special with Bitcoin. I think there are problems with it. And the big problem that I see is the number of transactions, the speed of those transactions, and the fees that will eventually be attributed to those transactions, which is basically the design of the system. And I think the design is poor and it will never work in the long term because of the fees. And when miners stop being subsidized by the mining, by coins, when they stop getting subsidized by coins and it's all processing fees, the fees are going to be outrageous. And no one's going to want to transfer anything on the blockchain, so to speak, because of the fees. So yeah, there's nothing. Having a finite amount of supply or fixed supply is not what gives it value. What gives it value is the fixed supply in relationship to demand, and that demand having a reason to be there. But if there's no reason, like let's say the processing costs are $250,000 to do a transaction or $100,000 to do a transaction, who the heck's going to do it? Probably not many. Momentum structural analysis is that escalated quickly. You can either chase things with zero economic utility or buy real assets. Gold, silver, companies with fantastic free cash flows. So what is he talking about? Breaking. Melania Trump's meme coin is now down over 80% from its all-time high seen in January 19th. 1.8 billion market cap or 360 million per day has been erased since its peak of Melania coin. Now, I have no idea why anybody's in this stuff. It doesn't make any sense to me. Now, should this go down 99.99%? Probably, yeah. Same with all the other meme coins and same with all cryptos in general. I don't know where the value is being derived from. Somebody would say, well, there's gold or there's silver. Yeah, silver has value. It's an element on the periodic chart. We use it for a bunch of things. Completely different. It's not even a comparison. That's like comparing oranges and grapes. Oh, they're both round. Well, that's great. I mean, great IQ test for you. Good job. Here's a banana. Crude continues to track the bottom of the 5-year cloud. We're out of the cloud almost. And this is your U.S. crude oil stocks by the EIA. Now, someone told me, it was on the Discord, that, we're in an oil glut. And I'm like, really? I'm like, where's your information from? Oh, it's the EIA. Well, here's the EIA. We are in a glut. That looks like a glut to you? That there is a glut. No, we are at the bottom edge of the 5-year range. The price of oil. Now, here's a bigger question for everyone. Why is the price down here? Why are we riding the low end of the 5-year range in oil? The only thing I can think of is that they're trying to, uh, it's a form of quantitative easing to have oil be cheap. So somehow they can keep this down here, maybe, to subsidize other things that are going up. So it's like, oh, well, at least we have cheap oil. Um, if this were priced, I think, fairly against historical inventory levels, we should be around $85, $86 a barrel, something like that, um, based off commercial inventory levels. But we also expended hundreds of millions of barrels out of the Strategic Petroleum Reserve to get down here. And now what's happening is people are looking at the spare capacity of OPEC, which might be, 4 million barrels or something like that. And they're like, well, come on, bring on the barrels. And they're like, no, we don't want to bring on our barrels. We're going to squeeze you in your own game here. We're going to squeeze your inventory levels way down. So the price has to rise. So when you take a bet in oil's down 35 to 40 barrels of oil per 1 ounce of gold, which is historically incredibly cheap. We've got OPEC basically having our back. And then we've got these low inventory levels, and they're like, nope, we're not going to do anything until the price goes up. So it's kind of like us or whoever is trying to manipulate the paper markets versus OPEC, and OPEC's like, no, I'm not going to do anything. Good luck with that. Good luck. We'll just drain your entire inventory level. Good luck. And we're not going to subsidize it at $70 a barrel so you can fill your Strategic Petroleum Reserve back up. We're not going to do that. You guys blew your load. You brought it down to 60 something dollars a barrel, and we're not going to do anything until the price comes back up. You're not going to fill your Strategic Petroleum Reserve for 60 or $70 a barrel. Good luck. So you can play all the paper games you want, but we're just going to drain your inventory. And then the price has to go up. Baker Hughes rig count, oil directed -6, gas directed +1, -6 oil directed. So the rig count continues to fall. And here we are at low inventory levels. Does this make sense? How can you be at low inventory levels? Shouldn't the price be increasing the rig count? So if you take these snippets of information, you're declining in rig count when your inventories are low because the price is too low. Make it make sense. How is that a possibility? Wouldn't the price naturally go up to increase rig count to bring this back to the 5-year average? Yeah, it would. Then why isn't the price going up? That's the question. Why isn't the price going up? Just wait, because OPEC's got our back. U.S. crude oil stocks hit the lowest since March of 2022 last week. EIA data shows BOA report. So EIA showing it through the graph here, it's way low, all the way back to March of 2022. How much was oil March of 2022? It was way higher than where we are today. What's with the disconnect here, guys? What's with the disconnect? Nick says, in 3 words or less, what prevents most people from building wealth? My answer is not enough income. What's yours? I think it's not income necessarily. I think it's the drive and motivation to save. So I think there's a lot of people that have the income, but they want to do other things with it. So they don't have the motivation to actually build wealth. So it could be a personality trait. It could be what they prioritize. It might be keeping up with the Joneses, and that's what they want to do. So I think it is a function of not necessarily income, but a function of wanting to do it. That's what I think. And they just want to buy crap. They want to buy a new car, buy new this, buy new that, and that's not prioritizing building wealth. They're prioritizing other things over building wealth. Christine says, no, drill baby drill. Slight increases in CapEx will not boost production. If we are lucky, they might hold U.S. Permian production flat. In my opinion, we might even experience a decline year over year for 2025. Drill, baby, drill, baby. Large producers in the U.S. Permian Basin unlikely to boost drilling. As producers were asked about their expectations for capital spending in 2025 versus 2024, a decrease significantly was one of the top answers here. Decrease slightly, remain close to 2024 levels. You do the percentage here, that's probably 50 something percent is what this accounts for. Increase slightly was the rest. So if you add this all up, it's probably going to be a decline in output. Drill baby drill. We're drilling so much that we cut rig count by 6. This is so dumb. I love it. I love it. Here's Jesse. He says silver gold divergence continues. Crypto, own nothing and be happy. There's a zero use case, no intrinsic value. Crypto propaganda will leave many holding a worthless bag. Definitions matter. Gold and silver equals money by our Constitution. All currencies eventually return to zero. If you can't hold it, you don't own it. What do you mean by a silver psyop? A psychological operation to steer the masses away from sound money into a giant fiat bubble. Pump fiat digital crypto, demonetize or demonize, I should say, demonize gold and silver, cull retail wealth, and train a generation to hodl nothing and be happy. On deck, financial collapse and CBDC's problem action solution. I love it. I like that quote there. I think he's pretty much on top of it. Here's Terry Smith. He says, we continue to apply a simple 3-step investment strategy. Buy good companies, don't overpay, do nothing. Exactly what I'm implementing. That is my strategy there. Lauren Boston says, great chart by Tavi. Although Trump talks a strong dollar, he doesn't. Stephen Besant and others know Trump's objectives of restoring U.S. industry and competitiveness require a much weaker U.S. dollar and very likely high levels of inflation. Correct. The history of the US dollar cycle, real expensive here. Plaza Accord Tech Bubble 2.0. If he drops this down, we're going to drop all the way down, and that's where US equities are undervalued, undervalued, undervalued. What this is telling me is that when the dollar goes up, you get a strong preference for the markets to swap to dollar denominated assets. It's a currency exchange rate play on top of the business growing. As the dollar declines, people remove those dollar investments and put them towards emerging markets and other areas where the currencies are stronger. So they invest in the businesses with stronger currencies. And that's what this is telling us on this movement. Tech bubble is when the dollar increased and it peaked here. And then when the dollar falls, money rotates out of dollar denominated assets into emerging markets, commodities, and other things. That's that capital rotation event right there. The US dollar is rolling over. Commodity investors now have to have the wind at their backs. He is 100% correct. You have a shoulder, head, shoulder, potentially could fall here. And that's what we'll see with a wind at your back for commodities and emerging markets and stuff like that. Morgan Housel says, don't attempt to keep up with the Joneses without realizing the Joneses aren't any happier than you are. And that is what I think is keeping people from building wealth. One of the things. They don't prioritize it. Halliburton's management explained that the layoffs were a direct result of reduced customer activity due to plummeting oil prices. So we are drilling so much that Halliburton, the largest energy service company, laid off more than 5,000 people last year. Major companies wouldn't lay off so many if they believed a revival of drill baby drill was coming. This is what years of low oil prices does. It shrinks the industry only to create supply shocks in the future, which is going to come. It's going to be big supply shocks. So we are drilling so much that the energy service companies are laying off people. Sounds absolutely, makes absolute sense, right? Off to a great start. Yeah, buddy, lightweight. You got to like Ronnie Coleman. Global oil stocks way down here, but this is what JPM Global is implying here. We're going to have some sort of increase, but we are continuing to go down in the wrong direction. Silver is a confirmed breakout, and he's using the RSI, turning back up, so it's go time in his opinion. Every time we get a little bit of momentum in silver, it seems like somebody comes in and tries to just absolutely wreck it to the downside. And it always happens in the morning. So we see in the evening, we get these big moves up, like 2%, 1.5% move in silver. And then in the morning, when the markets open, they slam it hard almost all the time. But I do think that they're going to lose control of the market. The deficits will be too big and they'll actually run into physical shortages at some point. And that's when they'll lose control out of it. Now, here's the thing. If they are trying to control it and they lose control, then I don't know what the price will be because we don't know what the fair value is supposed to be. The trend is your friend. It's already too late. This is oil rig counts, I think is what this is. And this is coming on back. I think it's production or rig counts. Put it both. And we're pulling on back here. Too late. Drill baby drill is already shrinking. Peter says, Trump said that with oil prices going down, I'll demand the interest rates drop immediately. What happens if oil prices rise instead? Will Trump demand that interest rates rise immediately? Trump can't demand the Fed or the market to do anything. What he can do is veto spending. So I don't know why he's saying this stuff. It doesn't make any sense. With oil prices going down, I'll demand that interest rates drop immediately. Okay, he doesn't control markets. What makes him think he does? I don't understand. All noise, no substance. Trump will try to talk down on oil prices every chance he gets. Get used to it. For readers aware of this particular insight, it's best to ignore every talks about on oil. The price is never low enough. So he will constantly talk about lower oil prices, nonstop. Get ready for it. Small speculators, aka dumb money, are all in on equities. Let's hope for the best. Look at this. They are all in compared to history. The last time it was all in like this is when we bottomed in commodities. Commodities bottomed right in 01, 02, 03. That's when the weakening dollar occurred. And then you could see it went down over time. And this is when commodities surged. I think we're going to have something very similar coming up. It says this, so Trump, I will demand that interest rates drop immediately. Tavi says this is what happens when a country is paying 5% of GDP to service its debt alone. Major implications to the US dollar likely ahead in my view. Peter says, I'm old enough to remember when an empty Trump oil threat would tank the futures market, WTI, 4 or 5% and equities even more. OPEC will not tap dance this time. MBs older and wiser, Russian exports are plummeting. EIA inventories have drawn 9 weeks in a row. Midland discipline, no glut in sight, adding here. Taking the opposite position. I would too. Yellow Bull, I will demand that interest rates drop immediately and likewise they should be dropping all over the world, says Trump. Lower interest rates are positive for commodities and in particular commodity-related equities trading on resource-centric exchanges such as the TSX and ASX. He's completely right. That weaker dollar is going to cause money rotation. It's all in alignment. Here's Trump, liquid gold, baby, the biggest oil, huge oil. Frankly, the biggest oil anybody's ever seen. Actual U.S. heavy oil production in California declined. It peaked in 1986. Good job. Way to go, heavy oil. You're killing it over there in California. The case for inflation resurgence continues to build. The Kansas City Fed Manufacturing Price Paid Index is surging again. ISM Services prices paid is also ticking higher. Long-term inflation expectations from the University of Michigan just reached a 15-year high. Break-even rates are accelerating upward. The Equal Weighted Commodities Index is nearing its peak since the Russian invasion. All of this is happening despite a strong dollar, which I see as unsustainable. Trump is already calling on the Fed to cut rates immediately, and the U.S. has little choice but to lower the cost of its debt, in my view, as inflation begins to surge. If he lowers rates and gets a weaker dollar, this is going to go ballistic, Goose. It's going to go ballistic. You better start talking about more. And that's what I've got for today here, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website, discounts to the coupon code. We've got a Mountain Time question and answer session up on Sunday. So Sunday Mountain Time. So get ready. A little bit, a 90-minute delay. Just want to let you know that, guys. And that's all I've got for today. So we'll catch you next time. This is Finding Value.